of you are interested in learning how you can become financially independent through investing clubs.
Yep. How many of you would like to know and learn how you can start an investing club or even be part of an investment club?
I do. Well, if you say yes to any of those questions, we got a great segment for you today,
That's right.
which was inspired by one of our subscribers, R. Coleman.
Shout out to R. Coleman out there. Today we will hear from Jackys Cummings Koski, a fantastic woman who was able, in her own words, go from financially ignorant to financially independent. And she was able to retire in just 8 years using the power of investment clubs.
Now, did you hear that? She went from ignorant to independent in just 8 years.
I like that. I like that.
We asked her all the questions and she holds nothing back. She'll tell you how to get started, how to avoid scams, what software to use, and whether or not you should start an investment club with your family and friends.
Yep. So if you want to be financially independent, starting from not even knowing what your net worth is to retire early by using the power of investing, I'm telling you, watch this whole video and take notes because Jacky is dropping some serious knowledge.
Yeah, and on top of that, if you like this and you want us to do more collaborations, make sure you comment down below. Now let's get into it.
Let's get it.
Thank you, twins. I'm glad to be here.
So, Jacky, if you could, can you tell people a little bit about your background and about yourself?
Yeah, I'm a single mom. I got divorced after I'd been married about 11 years. But even before that, I was raised by a single dad with 6 kids, if you can imagine. Made it through that. He actually, and he was a tough guy, hard worker, and I learned so many values from being raised by him. Right around the time I was supposed to graduate from high school, he got cancer and he ended up passing away. But I still graduated. I hated that he was not there to see me walk across that stage, but all the things that he taught me stuck with me. So I went off to college. I got my degree because in my mind, that was the way out of poverty. You know, we grew up very, very poor. And the main thing I remember thinking was that I didn't want to be poor when I got older. So getting my college degree was like the first step. And then I went on, got married, had my daughter, was married for about 11 years and ended up getting a divorce. And that was a huge awakening for me and my finances. So my daughter, she was about 9 years old at the time. So here I am. Now I have to take this journey and figure everything out by myself as a single mom with my daughter.
Now, did your husband and you share finances before you got divorced, or did you separate your accounts?
No, we fully had our finances together because when I met him, I was in college and he was in the military. And we both were totally broke and had nothing. So by the time we got together and had our daughter, everything was shared. So everything went into one pot. And for the most part, we're making similar salaries. He started making a little bit more than me a few years prior to the divorce. But that was, again, an awakening moment for me because when you get divorced, you basically take all of your investments or your assets and you split them down the middle. Now, in our case, the only assets we really had was in our 401k. Like, we had, just gotten a mortgage. So, that was debt in the house. I had a little bit of student loan, things like that. So when I looked at my 401k, I had about $20,000 in my 401k and thought I was doing pretty good. I mean, I think I was just doing the match. I didn't even put a lot of thought into it. And I thought my husband was basically doing the same thing. And apparently he was putting in a little bit more perhaps, but that just kind of meant that, more of my paycheck was probably going towards the bills. But his balance in his 401k was $120,000. So there was yeah, it's crazy, you guys. It was $100,000 difference. And I felt so ignorant. And I just said at that moment, I never wanted to feel that financially ignorant again. And so I vowed to myself that I was going to learn how to invest, that I was going to learn about personal finance and how to better manage my money. Now, during that divorce process, they do split everything down the middle. So I was able to at least get, half of what was there. But again, there was debt and things like that. So I would say at the time of the divorce, I was somewhere around like 36, 37.
Mm-hmm.
And I was maybe even at that point when I consider, the debt that I had on the house and, a little bit of student loans. I think I still had maybe like a small car loan at that point. So, I mean, I'm thankful that I at least got out at zero or
Yeah,
got
that's what I was
out
about to say.
at
Like,
even.
when
Yeah.
you say break even, you mean I'm starting my net worth at zero at this point.
Right, right.
No
And it might
assets
have
that
been,
I had. Yeah.
yeah, it might have been a little bit more than that. But the truth of the matter, you guys, I really didn't know because I wasn't even tracking my net worth at that point.
Yeah.
But trying to go back and recreate, I believe I was on the positive side. But again, when you're young like that, you do have a lot of debt, and I'm starting over at like 36, 37, and there's a lot of people like in the fire community, financial independence,
Who
retire early,
retired.
that are retiring at 37 and
Right.
38. So here I am starting over, and I think it was about 2 years where I really just had to work on myself and pull myself together, like emotionally, financially, and try to come out strong on the other end. So after that point, my starting point was, that I recall, was like right at age 38 that I found the investment club. And that was
Mhm.
my first tangible and measurable step towards improving my knowledge about investments and personal finance.
Okay, so you said so you got hit at the divorce proceedings when you found out what type of 401k your husband had versus you, right?
Right.
And you said you vowed to stop the ignorance. And
Right.
you said the first move you did was investment clubs. Why? Why investment clubs? Why not try to do it on your own?
Yeah, so here's the thing. I happened to be talking to a coworker. Now, I'm here in Ohio, but I had a coworker that was in Boston. And she was telling me about this organization called Better Investing and that they support investment clubs. And
Mhm.
she said they were nonprofit. So that kind of made sense to me because I think I'm also like a skeptic. So I didn't want to end up being a part of something that was going to take even more of my money. So when she told me about this, she had a really good experience and she goes, "Oh, they're all over the country. I'm sure there's one in Ohio." So I started Googling it, our best friend Google, and I found a model club in Ohio. Now, a model club is basically where it's an investment club that sort of represents the region on how an investment club should run. So they're probably more formal than a lot of investment clubs, but I really liked that because I needed the discipline, and they were open to the public. You could actually go to as many meetings as you wanted, so I didn't feel any pressure.
Yeah.
And everyone that was in the club as I was visiting, they were so friendly to me, and they were so
Mhm.
smart as I'm listening. So of course I kept coming back, and I probably visited that club 5 or 6 times before I realized they're truly nonprofit. They're mostly about education, and I would like to be a part of this.
Okay. Now, what about the experience of the people in the club? Do you have new investors or do you have more experienced investors as a bulk of the club?
Well, part of being like this quote model club was that there's a variety of knowledge level. You had some beginners, you had some people that were fairly savvy, and some people that were really savvy and had been investing for a long time. Now, I can say that most of the demographics of the club was older people. And I remember thinking to myself, it's a shame that a lot of people don't even think about investing until they get older. Now, since then, that was in 2008, so that was 11, 12 years ago. Okay,
Okay.
the demographics have changed significantly since then, and there are a lot more younger people, in their 30s, and there's a guy that was in his 20s. So I think that's just a reflection of the lower barrier to entry to investing, because really investing used to be a rich person's game, and it's not
Exactly.
like that anymore.
When we first started investing, we were working at an investment bank and it would cost you $50 for a trade,
Yeah,
especially if you spoke to someone over the phone.
right,
Now you can trade for free. So it's
right.
a much
Isn't
easier
that
time to get
something?
started. It's
Yep.
crazy.
Yeah, even in the investment club. So I started in 2008. And I kind of remember the $50 trades, but for the most of the time that I was in the investment club, they were like 19.99 a trade. So a
Exactly.
part of why the investment club even came together was to pool resources so that it would reduce the fees and the amount of money you had to pay per trade. Because if every member had to pay the $19, that would cost a lot more than just pooling it all together and paying one trading fee versus 15.
So explain that to me with the pooling of resources. You guys would, buy something and you would share the fee and share the actual trade you made. How does that work?
Yeah, so the club that I'm in, it is a formal partnership. Like I get a K1 every year. We look at the, what we made, what we lost, expenses, and all of that. It is a partnership. There's a partnership
So it's a
agreement.
business type of
Yeah.
thing.
Yeah,
Okay.
it's a bit so this part of it, the clubs themselves, they are, for profit entities,
Mhm.
but the umbrella organization Better Investing, they are a nonprofit.
So they
So
teach you, but if you want to
they
part.
teach you how to do it.
Yeah.
Right.
Ah.
So we're investing real money. And it is mostly about education, but the part about investing real money is really important because you need some skin in the game. And
Exactly.
so basically each person will put in so much money every month. And I would say the most important role in that club is the treasurer,
Mm-hmm.
and making sure that the treasurer is keeping up with all of the proper accounting practices. And then also, we all have access anytime to an accounting software where I can go in and see my share, my money, the club's money, and where we're at, like complete transparency. So for our club and most clubs that's under Better Investing, the minimum you could put in is $20 a month. The maximum is $100. And
Okay.
the reason again is because it's not necessarily going to make you rich, but what you learn and what you apply to your own portfolio could make you rich. So we don't want people with tons of money in there, but we want enough to say there's some skin in the game. And just to put some real numbers to it, as far as my numbers, so I started in 2008, right, which was a really good time. Anytime someone left the club, if a partner left the club, the remaining partners would have a chance to buy their shares. So I
Oh,
was all
okay.
I was all about that because some people in the club had been there a lot longer than me. So I would take advantage of that. So
Oh.
by the time 2019 hit, I had $32,000 in the club. And of course that's taxable money that is more accessible than some of my tax advantage accounts. So
Exactly.
that set me up nicely for my first year of retiring early. I could start to, take out some of the money that I had in my
Oh.
investment club. Yeah.
Well, let me ask you something. When you are picking investments or your club is picking investments, are you guys looking at single stocks or are you focusing more on dividend investing and helping generate income for yourselves?
Okay. What we try to do is look for high quality growth companies, primarily individual stocks, but not exclusively. For instance, for my club, we actually have a healthcare ETF.
Okay.
But everything else is pretty much individual stock. So there is something called a stock selection guide that takes all this information that we want to know about a company, the sales, the earnings per share, the PE ratios, things like that. It pulls
Mhm.
it all together on this one tool that allows us to analyze that company and say, do we think this is a great long-term investment? And for
So,
us, that is the key.
so you're not saying, hey, I got a hot tip from my uncle, guys, we should buy this. You're not
Exactly.
doing that type of thing?
No, 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 no. And here's our standard. We want a company that has at least 5 years worth of earnings and sales that we can research.
Mhm.
Okay.
So if it's not at least 5 years post IPO, we probably, not that we'll never look at it, but we
It's
are
out of your
looking at,
radar.
yeah, we're looking at these long-term holdings, growth companies. And part of one thing that the club looks at, and I look at in my own personal portfolio, if I buy a stock, my goal is to say, is this stock, do I think this stock can double in 5 years, which is pretty aggressive. And it's okay if I don't think they will, but what growth rate do I expect to see year over year?
Yeah.
Mhm. Now, you're using some technical terms here that people might not understand, but the one thing you said, IPO, that's initial public offering. That means that Jackie's only investing in public companies,
Correct.
right? And
Yes, ma'am.
she wants to have 5 years of record. Okay.
Right. So most people understand what sales are. So that's what they're bringing in. And
Mm-hmm.
then the earnings simply is a number that you look at to say, okay, what is the end result when you apply expenses, taxes, and all of
What's
those
their
types of
profit? Like what it
things.
is making at the end of the day.
Mm-hmm.
Right. And profit is even another line item if you want to break it down even a little
No,
bit more.
Lord. Yep.
And some of these are kind of some nerdy things. And I'm certainly not like, I'm not one to put my head down and start looking at these little numbers and all of that. I try to look at a 360 view and make it easy to understand what this company is about. For instance, I don't like to see a company with a lot of debt. You know why? Because a company with a lot of debt, they behave just like a person with a lot of debt,
Exactly.
right? They start making bad decisions and it's just
They're
not good for my,
desperate.
yeah, they're desperate. And so if I see a lot of debt, that turns me off, or at least, that's a mark in the I don't know column, right?
Mhm.
And the other thing is, free cash flow. Again, a company with a lot of free cash flow behaves just like a person with free cash flow. If the market goes down and takes a dive and your stock goes down too temporarily, like during coronavirus,
Hmm.
are you prepared? It's like a company that
Running
has
your
an
business.
emergency fund, right? So
Yep.
I have to look at it in those logical, simplistic ways to really get a feel for, is this a company that is sustainable and it's going to be around 5 years from now?
And
Because
you can get money out of too.
oh, absolutely. And the big drawback with individual company is, if the worst thing that can happen to a company is that it goes bankrupt. Okay.
Exactly.
So you are putting a lot at risk when you're in individual companies. Now, I am a nerd like that, and I have a portion of my portfolio in individual companies, but the vast majority of people, they they may not want to spend the time to do this type of analysis.
Mhm.
And the
I'm one of
majority,
those people.
yeah,
I
yeah,
don't.
exactly,
I
exactly.
have individual stocks, but that's probably a quarter or maybe less than 20% of my portfolio. The rest, I make it easy. I'm not even trying to look at it.
Right, and I'm exactly in the boat that you are, Nadia, right? Yeah.
Yes.
Okay. So I'm exactly in that boat. I love analyzing individual companies, but even with that love of individual companies, it only represents about 15 to 20% of my overall portfolio. The majority is straight up index funds, like through my
Yep.
401k, my IRA.
Exactly.
I have a separate account that I have designated as my single stock portfolio.
Exactly.
And on top of that is it's within an IRA, so I don't have to worry about getting these tax statements at the end of the year and having to do all this complicated filing and stuff like that. So yes, it's a very small part of my portfolio, but it is something that I enjoy, and I would say most people probably have one or two stocks that they would be interested in owning. So if you keep that as a small part of your portfolio, it's not gonna, if it happens to tank or even go bankrupt, it's not gonna ruin you.
Yeah, you
Exactly.
won't
So I
cry
like a
about it.
balance.
Exactly.
So with that, you have your investment club, but you also invest outside of the club. Is that what I'm hearing?
Absolutely. Yes.
Okay.
Now, do you, in your investment club, do you use a software or do you guys use some kind of investment club spreadsheet?
Excel spreadsheet or so like that.
So there's two main things that we use. Again, one of the most important is your accounting practices and having accounting software, because being a part of a club, you need like real transparency, because you want to make sure that every member can clearly see what's going on with the finances at any time. I would not be comfortable if that piece did not exist. So the
Well,
other yeah, and the other piece is, like, when we analyze companies, the foundation of what we use is something called a stock selection guide, and it's a tool that Better Investing has, and it's just kind of purchased through the club. But like an individual could join Better Investing and not have to necessarily be a part of a club. And I know it's like less than $100 a year or something like that. So it's not that expensive, but when I think about all the time that I was taking to go find these different pieces of information,
Mm-hmm.
the value of being able to bring all of it together and help me with the analysis, it was valuable to me because I put a premium on my time.
Mm-hmm.
So the stock selection guide is what we mainly use, and we are doing it as a group. So every meeting we do at least two components. We do an education component where we teach about a certain topic as it deals with investing.
mhm.
And then the second one is a stock presentation. So we constantly have good companies where the presenter has done thorough analysis, thorough review. Like last month, I was a presenter, and the stock I chose was Adobe. And I've owned it in my personal portfolio for at least 2 years. And so I decided I wanted to present it to the club. Now, a lot of times the needs of the club and my personal needs are different. So even though this is a great company, high growth company, solid, great management, all of those things, um, it was not something that the club decided to buy. And
Mm-hmm.
we all vote on the stock, and we have to look at what is our diversification. Like, do we have, like, Adobe is a tech company, So we look at, oh, we have a lot of tech. You know, we've got Apple, we've got so many other tech companies. Right now, I don't know if we should add another tech company unless maybe, you know, we're going to sell something. So, and I was totally fine with that. Like nobody's feelings gets hurt or anything.
That's true.
But it's very important, like every month, to have a new stock that's introduced, and we thoroughly go over it and review it. And many times it's not something that the club wants to buy at that moment, but we're constantly looking at great companies and you know, kind of going through, you know, is this a good fit for the club or not?
So it's a voting system, and also the presenter has to do the research
Oh,
to
absolutely.
make sure and try to convince the other members. But if not, it's all right. It is a learning experience either way, either if you buy the
Absolutely.
stock or not.
Well, let me take one more step forward, is that you're taking emotion out the equation. It's
Right.
all about the fundamentals of the company and what your strategy is.
And that's what investing is about.
Yeah, you're not gambling, you're setting your foundation before, so you're not swayed either way if something exciting comes up.
Yeah, absolutely. Because when I was presenting this stock, my feelings were not hurt at all that the club didn't buy it. Again, I could do whatever I want to in my own portfolio.
Exactly.
And the other thing besides, you know, introducing new companies to the club, we obviously have an existing portfolio of about 10 to 15 individual companies. And then we have that healthcare ETF. So each person in the club has to follow a stock. So every month we submit a stock report. So we're not just initially introducing it, but we all have a stock that we are following, and we have to give our reports at least a week to like 2 or 3 days before our monthly meeting. So my stock that I follow is Apple. And frankly, no one in that club should know more about Apple than I do.
Okay.
And I enjoy following the company. I even listen to the earnings call, which sometimes can be boring. But for Apple, I mean, I love Tim Cook. I love their leadership. I love their management. I love a lot of stances that they take. And I have followed them, not necessarily for the club, but I've owned Apple probably for the last 15 years. And I've scraped a little bit off the top, sold a little bit here and there. You know, if the market takes a dive like it did back in March, I might buy back a few more shares or something like that. But every person in the club follows a stock and provides an update and a stock report at every meeting.
Okay.
Now, Jackie, I want to bring it back to something that I'm not sure if people actually heard you. You said basically you were doing acquisitions that helped you. After you retired, you already had some money that you can access. So we're talking about the age of 38. You had started. You're on broke. You're basically even.
You knew nothing
zero
about investing really at that point.
right? So you retired and already was able to take out money. So that means you went from ignorance to retiring and using money. I don't like the word ignorance, I'm not saying like, but you went from knowing nothing to being retired and not having that much in savings. How were you able to retire? Did you retire early? We talk about financial independence. Are you a FIRE member?
So yes, so I'm totally a member of the FIRE community. That's Financial Independence Retire Early.
Like
and
the twins.
yes, yeah,
You
like
want to
the
be
twins.
part of that club, make sure you hit the like button. And we want more people in this club.
And you can start in your late 30s and even
That's
later.
right. I started at 38. Now I retired at 49, but I had reached financial independence at like 46, about 2 years prior. So
that's 8 years.
That's
understand
8 years.
that. That's 8 years.
Yeah,
What have you done with 8 years of your life that you couldn't retire? And Jackie is that example right there. She retired in 8 years.
Yeah, so of course I think about, boy, if I would have started this a lot sooner, I could have retired a lot sooner. But I wanted to get things together. And you're right. So I was just happy with moving the needle. And even years after I got divorced and I started trying to pull it together, I still didn't start tracking my net worth until like 2013.
Oh, wow.
And so I wish I would have started that a lot sooner. And we didn't have tools like, you know, Personal Capital and all these different apps that help you track your net worth. So I started doing it on a spreadsheet, and I still have that spreadsheet. And over the years, I've added all these different things, and now it's like a monster. But it's really good to see where you're at and how you're moving the needle. That may have been even more motivating to me early on if I would have started it. But yeah, you're looking at a span of from age 38 to 36, 37, I reached financial independence and then held off on retiring. You know, I needed a little bit more of a buffer, retired at 49.
Now, were you
So,
making like 150,000,
uh,
200,000 a year? Was
Yeah,
that
were
the
you
case?
bowling?
no, I was not, unfortunately. So I, at the time that I got divorced, I was probably making somewhere around 40 to $50,000.
Wow.
Okay.
Okay.
Now, over the years, obviously, and you know, a lot of people that feel like, you know, I don't make enough money. I don't know if I can do this. I had to ask myself this question, and I would ask everyone this question: how long do you think that you will be making $30,000 or $40,000?
Exactly.
Think that that will improve, like if you got another certification, if you got a side hustle. So rarely are we just stuck at that place in time.
Mhm.
Okay, so we start to move up, and as I did. So I worked for the same company for about 20 years, and I just had no desire to be on the management track. So all of my salary increases were, you know, merit increases, cost of living increases, and things like that. So by the time I took the last 10 years of working for my company and I just averaged that out, and the average was about $80,000.
Okay.
I was in sales, and some years were pretty good, some years not so good, but on average, it was about $80,000. I never made over six figures.
Mhm.
So, depending on who you're talking to, 80,000 might be great. If you live in California or New York City,
Not
you
so
might
great.
be, yeah,
Were you
not so
also a
great.
single parent at the time
You're a
too?
single parent.
You're raising your child.
So I think that was the hardest part, being a single parent at the time. And on top of that, for me, all of my family still lived down south, and I was in Ohio. So I didn't even
Mhm.
have that family support where I could just drop her off or, you know, have, you know, that support system. So I was always thinking about her, trying to take care of what she needed. And a big part of that time, she was a teenager.
Oh
And
boy.
you guys, your kids aren't there
Yeah, I
yet.
did.
But
Yes. I'm not.
the
I'm not
I
ready.
heard about those years.
I'm not ready.
the teenage years are tough. And I used to say, you know, my girlfriends or people that I knew would tell me how awful the teenage years were. And I'm like, my daughter's not like that. She's amazing. Oh boy. When she hit 14, I would say, you know, there was a lot of headbutting going on.
Hmm.
So you're dealing with an emotional teenager, all the things that they want. She wants a car. She wants to go to cheer camp. She wants to do all these things. So that's costing me a lot of money. And on top of that, as far as my career, I could have maybe, you know, I was in sales, so I could have taken a field job and done a lot of traveling and probably could have almost doubled my salary. But my priority was my daughter, and I was okay with making a little bit less if it gave me time with my daughter because I knew she wouldn't be, you know, in the house with me forever. So I made that conscious decision to be okay with what I was making and just concentrated a lot more on what I was doing with the money that I made versus just trying to have a lot of money coming in, because I know a lot of people that make plenty more than me, but what you do with it is critical. And I was just trying to focus on what I was doing with the money I had.
Now, one of the things we try to stress to people, it's not how much you make, it's how much you keep and what you do with it. Now,
Exactly.
Jackie was able to retire in 8 years. And if you're making 45,000, you think that may be impossible. No one's telling you you have to retire in 8 years.
Now, on top of that, Jackie said something also that was great. She made conscious decisions. I would say not just only with her job, but with her investing and just money in general. I love that. You have to make decisions. You have to be aware of what you're doing and what you need to do to get to where you want to be in the future.
And one of the things that Jackie was saying that's similar to how Nicole and I feel is that in the beginning, you're scared to look at your numbers. You're like, but once you start looking at those numbers and you say, I can fix this, you will be fixated on those numbers and you will make them work and start increasing, and you'll be amazed at how quickly it can happen.
Yeah, and you guys know that saying, you can't manage what you don't measure.
Yep.
Exactly.
So if you're not measuring it, there's just no way. So the reason why I wish I would have done my net worth, started tracking my net worth earlier, not because I thought it was so great or so positive, but because I think it would have motivated me sooner to start maybe moving a little bit faster or doing some things a little bit different before. And I just know that I probably would have gone a lot further if I would have started it earlier, just by seeing the needle moving in the right direction.
Now, outside of learning what stocks to buy or how to buy stocks, what other benefits did you get from the investing club? Did they teach you about FIRE? Did you hear about that before? Was it the different personalities that you learned something from? What were the biggest benefits from the investing club?
Well, thank you for asking that. And that's a hugely important question. So, as far as the finances and investing and things like that of the club, um, I think our rate of return, just looking at this year, it's a little bit better than the S&P 500, but it really didn't stop there. Okay, it gave me a lot more confidence with the stock market,
Yeah.
learning about how the stock market worked in general, the community part of it. So every month when we met, we would always go to lunch afterwards and we would talk about all kinds of other things. And they just really embraced me. And I didn't really learn about fire through this organization. I probably taught them about fire
Okay.
because many of them were older than me, right? So, so fire was, you know what? Here's the connection that I've made. So, a lot of people in that club, they probably did reach fire before it was even a name.
Exactly.
Because I draw a lot of parallels between the values as far as finances and investing, and I compare that to the fire community. They are very similar.
Yeah.
But what I learned about myself is that the community part was very important, to be around like-minded people where I didn't have anybody else in my real life that ever invested or talked about stocks or anything. So all of a sudden I got these brilliant people. They're all smarter than me. And I get to talk about stocks at least once a month with these people. And most of them have become very good friends of mine. And the value that they brought me at a time in my life where I really needed it, I just could never express how important that was to my whole journey and going from being financially ignorant to financially independent and then finally retiring early.
I like that. Financially ignorant to financially independent.
In 8 years.
Yep.
Yeah.
Now,
That's the title of a book, right?
That's the title of a book.
exactly. Now, my thing is also, is it all rosy? Have there been any hiccups in your investment club experience?
How's it going now?
Yeah. Are there?
Yeah, it's going good. And the thing is, every stock that we buy is not doing phenomenal. Like I can look at our top 5 and our bottom 5. The top 5 are looking great. Like we've got Apple up there. We've got a company called Illumina, Tractor, very diversified. So I'm looking at those and I'm like, yay, we're doing great. But then I'm looking at the bottom. We've got at least 4 stocks now that are on the negative. Like I think there was one that is down like 20%. One is down like 10%. So never is every single stock doing great. So you've got these wonderful investing minds that do their research. It's still not going to be perfect. Exactly. And there are years that we didn't beat the S&P 500. So the big value is the learning experience, becoming comfortable with the stock market and investing. And you go from there. And it reminds us that diversification is very important because sometimes it's actually an industry that ends up taking the whole industry down. So so yeah, all the stocks that we get are not perfect. We've got a couple of dogs in there. And again, it's not just me making the decision. So even though I think something is a dog and I think we should get rid of it, that's not enough. It's got to be voted. It's got to be voted on, and the entire organization or the entire club has to approve it. But we have discussion, for every stock we buy or sell, you make a motion, someone seconds it, and then you vote on it. So it's a pretty formal setup. And honestly, I must have it that way because I can't just get with a few people and then they don't know what they're doing or things are lax, accounting practices are lax. So for me, being formal, transparent, and making sure that we are, really
serious.
Yeah, really serious about it, and being making sure that everyone knows what's going on the entire time.
Well, let me ask you, do you think it's possible to start an investment club with your friends and family, or would you recommend going to a more formal model that's already been put in place and having those people like in a partnership model that protects everyone?
It depends on your friends and family.
I agree. Always.
The answer for me is no way. Okay. However, it's funny that you asked that question because I have several club members and other people that I know that's in Better Investing that actually has a family club. So they're maybe siblings, kids, nieces and nephews. they have a family investment club. Now, things may not be as formal in that scenario. They can just, more than likely, they probably do have some kind of accounting software. But imagine what an awesome teaching tool that is for the younger people in that family or that group. So I always love it when I hear people say they have a family investment club. I'm like, that is amazing. So yeah, with friends and family, depending who they are, like in some cases I've seen where they want to kind of put all the work on you, like Jackie, you love to analyze these stocks. You do all the work and you look at all of them.
We'll buy what she's saying. We'll sell what she's saying.
Yeah, you're convincing me now
Exactly.
to like start an investment club or be part of one because really we're our investment
But
club.
she should always listen to me,
Exactly.
you know?
Right. And to start out, you don't necessarily like, there's also an online club that was started like in the last couple of years. And with the online club, I don't think they invest real money just because of the nature of that
Right.
club, but you still have the education. You still have the stock presentation. You
Okay.
still have all the elements of a club that invests real money. So, and then there are model clubs all around the country. Now, right now, we're all in COVID, so we're doing things remotely, but you can go to these model club meetings in person because they're designed to, show you exactly how an investment club works. And you can observe and visit as many times as you want.
That's
Now,
It
fantastic.
doesn't matter.
you mentioned a lot of times, you mentioned transparency, going in because you were skeptical. Is it because, are there scams when it comes to investing
Yeah,
clubs
what investment club scams exist or
that
have you
people should
seen?
be aware of?
Yeah, and I don't know if it's clubs per se, but all of these companies, tools, software, strategies, many of them are designed to make whoever's selling them a lot of money.
I agree.
And I just didn't want to get caught up in that because the financial world and the investing world, they are riddled with things like, let me show you how you can day trade. Let me show you how you can, double your money every 3 days or something like
Or
that.
make automatic 10 or 15% every year
Yeah.
and to
Yeah.
guarantee you your return. Yep.
Right, they make it sound really good, and I wanted to make sure it wasn't something like that. So the fact that Better Investing is nonprofit was huge to me, and they didn't really necessarily tout it. I did my own research, and they might talk about it, in the club every now and then, but that is a big deal. And so when and I was president of the club for a while, I was vice president. I would always start every meeting with saying that it is nonprofit
Yeah.
and that our meetings are open to the public at any time. Come visit at any time. We're very transparent, and we love teaching people about investing and just showing you that it's easy and it doesn't have to be so hard where you're seeing all these words and terms. It's a learning process.
No, we
So
want.
yeah,
I'm
so I
sorry.
just wanted to
I
stay away
want
from.
people to know that this is not sponsored by Better Investing. We are
Right, right.
making sure that people are educated, and we want to give you guys the best information
We'll leave the link to Better Investing
in
down
the
in the
description.
description below.
But if you guys are feeling what we're talking about, and you see 3 women who have done it, are you feeling comfortable? Make sure you comment down below and say, I'm comfortable. I'm willing to start.
So we're
Yeah,
talking about financial independence. We're talking about investing any way that makes you feel comfortable, and just knowing that you can start, and where you start doesn't matter, just as long as you do start.
yeah. And let me also say this. So we have a very diverse club membership from, their experience with investing to demographics and so forth. So some people will every now and then start using these big words, and we just bring them on down and we say, for our guests, people that have never invested before, here is what growing sales means. Here is what low debt means, and things like that. So it is very, very important to me and our club and anyone else that I'm talking to about investments is to make it simple. It's really not that hard. I know the industry has totally complicated it, but with today's technologies, today's world, there are so many resources. There's so many companies that are making this stuff a lot easier, and it's no longer a rich man's game. You can start investing in great companies, or even ETFs or mutual funds. You can start with like $5. You don't need a lot of money to get started. And if you put in a little bit at a time when you're really young, like in your 20s, I mean, you really don't have to do a lot of heavy lifting because you're giving yourself all that runway for it to start to pay off.
And what Jackie's mentioning right now is the compound effect,
Oh
which
yeah.
we're talking about. And you can actually even get started with $1 now And we're starting to tell people more and more about fractional share investing, where you can get some of these great companies that Jackie was speaking of in terms of Apple,
Google,
Google,
Amazon.
For a dollar, for as low as $5, you can start investing. So we'll put that video up in the cards, and you guys can check that out if you're interested to start investing.
Now,
Yeah.
Jackie, what does life look like now that you're retired? What are you doing?
Are you sitting down watching TV all day? Or you
Yeah.
just
I wish you guys. So here's what I'm doing now. Well, first I'll start with the investment club. I'm still a part of the investing club. Like what I've gotten from them has been invaluable. And now that I have learned a lot, but I'm still learning every day, but now I have learned so much about investing. Now it's time for me to teach. So the new people that are coming into the club, or just people that aren't even in a club and want to know more about, investment clubs, because once I started talking about it, for some reason people were very, very interested in it. I'm like, oh, well, here's what I did. So I'm still a part of the investment club because I got so much value and I just really wanted to pass that on. If you think you've learned everything you need to know, then it's time to start teaching. And that's what I've been doing. The other thing is even though everything I know about investing and personal finance has been self-taught. I mean, I would dig and dig and dig for the information that I was looking for and the things that I wanted to learn about. I would listen to podcasts, YouTube, you guys' channel, and a bunch of other things, self-taught. So I decided, even though I think I know most of what I need to know, I know that I want to teach others. And so I decided to go back to school to get my master's degree. And I'm attending a university now, getting my master's degree in personal financial planning and financial therapy.
wow.
Because the behavior side of this is so big, you guys. And I think about myself and everybody that I talk to, the things they do with money has such an emotional side. So I was very interested when I saw this program. So I'm taking that master's degree, and I probably will go on and get my CFP, just to make sure that I have done all of the learning, the experience, and things like that to make me a credible resource for people that are trying to learn this. So that's what I'm doing right now.
That
That
doesn't
takes
sound like
most of my time.
retirement to me at all.
I know, right.
Oh no, I want to do
Mostly,
what I want in retirement. It sounds like she's doing what she wants.
well, and that's the thing. And the reason why I even started with the whole down the master's degree path is because when I was an undergrad, I'd grown up in poverty. I had very little, even in college. I was a poor college student, to the point where learned this from my dad. You work for what you need to pay for. So my only idea of the way to pay for college is to work. So I work full time. A lot of times I had two jobs. So I was working 50 plus hours a week while I was going to school full time. I was taking a 3 to 4 class load because that's what everybody else was doing. And so obviously something had to give. So my grades was what had to give. I was always a pretty bright student, but working 50 hours a week, something's going to suffer. So my GPA, I was very disappointed in how I did in undergrad. Like that was just something that just stuck with me. And I knew that I was capable of more. So I think I don't even remember what the lowest GPA was to graduate, but that was mine. So I think I had like a 2.4, 2.6, something like that, nothing to brag about at all. So I said, you know what, that is one thing I would like to reclaim.
Fantastic.
So yeah, so I of course was very nervous. I didn't even know they would even accept me into graduate school, even though that was 20 freaking years ago. They still look at your transcript. So when I had to pull out that transcript, I'm literally in tears, you guys, looking at my 2.4 GPA. But I did get accepted into this master's program, the one that I wanted. And my goal is to graduate with a 4.0 and just reclaim those pitiful grades that I got when I was an undergrad.
I definitely believe you can do it, because you have definitely shown that once you put your mind to something, you're going to make it happen. I can see that.
Different Jackie today. Now I'm retired. I can focus full time on school, something I wish I would have been able to do when I was an undergrad.
Now, Jackie, you also have a book out too. How can people find your book? What's the name of your book?
Yeah, the name of the book is called Money Letters to My Daughter, and that 2 is the number 2. And basically, you guys, I had been learning so much about money and personal finance as I was, once I became an adult, had my daughter, And I didn't want to lose all of that, right? Like they say, when you feel like you know everything, it's time to start teaching. So my daughter was about 14 years old, and I knew that I did not want to lose all of this information and not pass it on to her. Now, again, she was 14, so she wasn't listening to much that I had to say. So I decided to put it all in a book. My major in college was communications and journalism, so I was a writer. I loved writing. So I decided to put it all in a book, but the way in which I wrote it was so important. So I ended up writing just these short little letters on all the topics that I had learned in plain English and getting right to the point so that she would at least be more willing to read it. So I started the book when she was 14, and I wanted to be able to give it to her as a graduation gift when she graduated from high school. So I got finished with it when she was around 17. So it took me 2.5 years, but this was a very much a passion project where if I had only sold one copy of that book and it was to my daughter, that's what I was trying to get out of it. So the book has been around for more than 5 years now. I've spoken to a lot of schools, universities, because, once you write a book about personal finance, people start to dub you as an expert. I don't think I'm an expert, but I'm certainly more than happy to share all the knowledge that I shared with my daughter in that book with anyone else that wants to listen and wants to kind of be a little bit more educated about personal finance.
Now, we'll leave the link to Jackie's book below too in the description. But Jackie, our guest today, where could our subscribers, learn more about you?
Okay, they can go to my website, which is moneyletters2.com, inspired by the book. And, there's a few more things that's out there. I have a Market Watch video that kind of chronicles my fire story a little bit. And I did this awesome new conference back in March before coronavirus, where I thoroughly went through all of my numbers. So talk about transparency. I talk about my net worth. I talk about where my money is. I talk about my salary on stage in front of a bunch of people. So those things are out there as well. But it was important for me to share my story and to not just keep it to myself, because if it could, maybe turn on some light bulbs for some people, I think the messenger does matter. So the fact that, I'm a single mom, I made less than six figures, I'm an African American woman that, grew up in poverty. I just wanted to share all that, and that it is possible and anyone can get on the path. You might not be able to retire early or even to become completely financially independent, but you can start moving in the right direction.
I think people don't understand that Nicole and I have a lot of similarities to you. We grew up in poverty.
We're actually the
We're the
last
last two out of six children. We're the single
Wow.
mother, and we are financially independent. And we retired early too.
Yeah, and our
So
mother
it's-
passed away very early
Yeah.
too.
So
So that's why I'm so glad to be having this conversation with you guys.
well,
And it's
people-
not, yeah, and it's hard to say that everyone can make it, because mentally, if you feel like you can't, it is hard to move
You're
the
right.
needle.
Yeah.
But if you maybe see some people that look like you, have a similar background, or you really start to listen to a lot of different people and you see that some of them might have started exactly where you're at, you might start to open up a little bit to say, well, maybe if I tweak this or tweak that, it could be a 1, 2, 3 year process just to get your mind right. But
Yeah.
that's the first step. And it was the first step for me to say, okay, I think I can do this, and here's where I'm going to start. For me, that was the investment club, but I would have never imagined that it would have led to where it has led to, where I was financially independent and now retired early.
That's what I'm talking about. Yep. Well, thank you very much, Jackie, for joining us today.
Yeah,
Thank you guys. This was so great.
this is great, and I just love your story. I love what you're doing. I've learned more about investing clubs today than I've ever learned, so we're definitely going to check out Better Investing.
And shows people a different path. Like you learned it through investment clubs. We did it through real estate and investing also. But the key thing is to start. Believe in yourself and take that step forward.
And the key thing is for us that have done it to pass on the information. So we definitely appreciate your time today.
Absolutely. Thank you guys.
Thank you.